always a good thing to do. So we are recording it so that we have that. So welcome everybody. Really great to have all of you here with us today. And what we're going to do is we're going to kick off by inviting Caitlin up to the stage, who will join us. And then we'll take an opportunity to just intro you all to Crypto Mondays London and to the Academy and share any news that she wants to in the moment. So welcome, Caitlin. I am going to unmute you. And there we go. And I'm going to mute myself. Over to you.
Hi, thanks, Allison. Hi, everyone. Welcome to our fourth Academy session. So I'm the founder of Crypto Mondays London, and it is, I think, one of London's largest and longest running IRL crypto meetups. So we meet every month to learn about something new in the Web3 space. And we also offer, in addition to the education aspect of what we do, we also offer networking opportunities. Some of the feedback we started to get was that our intermediate sessions were a bit too technical, a bit too complex for some people attending. So in order to address this, we started the Academy. So the Academy is just a foundational 101 session about the same topic as what our IRL event is going to be. So this month, we're talking all about crypto trading. So today's session is much more of, like I said, a 101 basic session. And then next Monday at our IRL event, we'll be talking a little bit more specifically about different types of trading versus investing, and just what it's like to trade in a bull market versus a bear market, which is nice. It's a nice change, right? So yeah, so thank you all for coming. That's pretty much it for me. I look forward to seeing you at our event next Monday if you're in London or on the live stream. And I'm super excited to hear from our guest speaker today, Ruben, and also our sponsor, Wasim from Vault 12. So back to you, Allison.
Perfect. And a great handover straight to Wasim. So if you'll join us on stage, and I know that you're currently in New York, so I think it's midday for you or mid-afternoon. So welcome. And I'm going to hand straight over to you.
Thanks so much. Yeah, well, I got to see a few people. Caitlin, it was good to see you last week in Paris and the week before in New York. So welcome, everyone. I'm with Vault 12, and we're so excited to sponsor Crypto Mondays London and the Academy, which is kind of a unique thing that the team in London puts together. I'm very excited that you're all here for a session this week and next week on trading. It's such an exciting world. These crypto assets have been around for quite a while now, and they're doing extremely well. Whether they go up and down, they still seem to do well. And what Vault 12 does is it helps you protect those assets by making sure that those assets are backed up in a digital vault, kind of like a safety deposit box. And we also enable you to set them up for inheritance so that these assets can also be passed on to your family in case you're incapacitated or you pass. So with that, I think that's everything that you need to know about Vault 12. If you want more information about what we do, vault12.com. And I'll hand you back to Alison and enjoy the session today.
Brilliant, thank you. And I just want to say, I mean, it was for me great hearing all about Vault 12 last time, and I know that it did definitely make me, as an older person, jump over and go, I really need to check this out, especially with a younger daughter who at the moment isn't quite into wanting to know how to access it all, but I know that in the future she'll be really interested. So a huge appreciation for what you do to protect my assets and to help me in the future, and particularly my daughter. So anyone wants to hear more, please do click onto their website, have a look and learn more. And with that, thank you very much. So as you've already heard today, big session all about Crypto Trading 101. And I think we are going to use the word 101, and we have talked with Ruben, who is our keynote speaker, who I'll introduce and bring up in a moment. But what we've really said is, remember, it's 101. Okay, so we want the session today to be about how do we how do we teach our children? How do we teach our parents, our grandparents to really understand what all this world is around crypto trading? Hence Crypto Trading 101. So I know that Ruben's got a really great session planned for you. And so what we want to do is to make sure that we take you through it. And then there's lots of questions, put them in the chat or save them till the end. And then there'll be a good 15-20 minutes for questions and answers. So please do stick around and share some of your thoughts with us at that point. So in terms of what we're really wanting, we really want you to walk away today going, oh, I've got a greater insight into crypto trading. I actually could describe it to people. I understand what that might mean. And particularly, I know how to keep myself safe. So Dior, all of that. How do I really make sure I protect myself? So with that, I am going to jump straight in because I know everyone's here to hear all about crypto trading from Ruben. So I'm going to ask Ruben to unmute, or I'm going to unmute him as he is already on the stage, and say, hi, Ruben, welcome.
Hello, everyone.
Hello, 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 hello. So firstly, where in the world are you dialing in from?
I'm currently in Italy, so I'm back to my hometown for a few days, taking some rest. At least that was the original ideas. Then markets decided to rock my days a bit, so but that's fine.
So with that, really pleased that you could still be with us today as well. So, okay, so what I'm going to do is so that you can really intro yourself, intro how you got into this and your company, I'm going to hand the stage over to you and let you, you can share your screen and take us through all that you want to share with us today. So thank you, Ruben.
Thanks. Can you all see my screen?
Definitely,
Okay, cool.
we can see your screen. Thank you.
Okay, perfect. Thanks a lot, and thanks for having me today. I hope that, as you said, everyone will walk out from this session with some insights about how to tackle crypto trading, which is a very hot topic these days, and one that should be handled with very much attention. So the idea was to have a 101 very basic crypto trading course, but bear in mind that what I'm going to tell you today are things that everyone doing crypto trading are keeping in their mind every day, even if they are doing this for as a profession after 30 years. So these are concepts that you will keep you should keep in your mind the first day of your trading activities and after 20, 30 years. So it's something that it's very, very at the foundation of this business. What we are going to talk about today, I will start with an intro of myself, my journey, how I got today where I am, how you can move your first steps into crypto, taking into account some of the difficulties and the dangers that you may encounter along your path. Different approaches to do it through crypto trading. This is actually probably one of the most important aspects because crypto trading is something that it's very broad as a concept. So you can talk with 100 traders. More or less, you will find 95 different approaches to trading, 95 different ways to handle their days and to place their orders and trades. So this is something that it's very peculiar to each individual, although we can have some generalization and we can group all these approaches into some macro areas, but ultimately what you need to look for is your own trading style that fits your needs and that goes for the second section. And finally, I will lay out which are the most common mistakes everyone makes. And this is, I want to underline the everyone, because everyone has gone through these problems, adults, and overcoming them is what really makes the difference between being a successful and a not successful trader. So let's start a bit with my journey, who I am and how I got here. I started around 12, 13 years ago in working in an asset management company right after my business bachelor degree. That was my introduction to macro investing. So where the company where I was working was managing asset across bonds, equities mostly, and allocating them across multiple regional areas around the world, around the different business activities, and that gave me the opportunity to see how every aspect of investing is connected one with another, and how macro events and the evolving of the economic global environment shapes each of these asset classes. And of course, asset managers have to take the right decisions in order to allocate more appropriately capital across these asset classes. Then I moved into a brokerage firm in Italy. That was actually the most formative, probably the most formative working experience, as I was dealing every day with people literally struggling with trading, getting into trading, surviving the market. And what was most shocking for me is that more than 80% of traders were actually in loss. So people were hoping, literally hoping for some profits to grow their capital, to make some money out of the markets, but ultimately they were literally bleeding money and giving the money to the market. That was a kind of a shocking experience, but I was also very interested in understanding, okay, if this 80% of people were losing money, who is the other 15, 20%? What are they doing differently to be successful? And that was the start of a long journey, I would say. Then 2016, 2017, I got my first touch of the crypto business. Of course, there was the initial bull market of 2016, 2017. So things were really getting hot in the space. And I said, okay, cool. This is a very interesting space. Bear in mind, back in 2016, for those that are familiar with the financial conditions, we were in a state where central banks were literally pouring money into the system. Financial situation was very, very stable. So everyone was just selling bonds and buying stocks, and everyone was happy. So I would say that it was quite a boring environment. Crypto was literally something that at the very beginning was just something interesting, was evolving every day. And then I said, I started to be in the financial markets because I want to see every day something new. Ultimately, I was always seeing the same things over and over again. And crypto was kind of an escape to that. So I started into the rabbit hole. I met CoinRule co-founders. I started working with them. We had a very nice time together building the platform, and that gave me the context of getting in touch also with the people in the crypto business trying to make money out of the market. And again, the feeling was the same that I met and in the past with the traditional financial markets, people were trying to make money and they were struggling still. The difference was that with the crypto market, when everyone was making money basically during the bull market, that was easy. Then most of the people lost money on the way down. So again, the same topic came all over again. So people were hoping to make money to grow their financial situation, and yet again, they were actually giving their money to large entities or other entities that were doing things in a more professional or in general more appropriate way. So 2 years ago, 1.5 years ago, I decided to go on my own, and I started my own trading entity. So currently I'm an independent trader, and I call it my Wonderland. Now, bear in mind, this is no Wonderland because there are always days where I say, I should take maybe some different decisions. Maybe I should go back to a job with an employer, more stability and stuff like that. That thought just crosses my mind for a few minutes because right after I say, okay, there are a lot of difficulties. Nothing is perfect. No job is perfect. But finally, after this long journey, this is where I actually wanted to be from day one. So I'm happy to where I am, and I hope that my journey will inspire also people not to do the same mistakes that I did since the beginning at the beginning. So that being said, if you are wondering how I can get into crypto, what should be the first step that I should take to start investing in the crypto space, there is one first critical decision that you should take. Where I should have my asset on, how should I buy these assets? So the first and most common choice, at least since the beginning of the crypto business and as of today, the most easy way is to just open a Coinbase account, a Bitstamp account, Binance account, a custodial wallet, and literally just send your money from your bank to the wallet and buy your cryptocurrencies of choice. The pro here is that the user experience is very intuitive. So I remember in 2016, 2017, probably people that are even older in the space would have found a much more complicated user experience. Putting money into these wallets was not as easy as it is today. Now the steps to get your money into the account and to buy the cryptocurrencies is very, very easy. It takes sometimes 1 day even or a couple of days, but you can be set up in a very short period of time, and you can have a prompt, most of the time, prompt assistance of people that work at these companies, and be assisted step by step, not to mention the countless guides that you will find on the internet. So if you, for example, choose to open an account on Coinbase, if at any point you will find something that is not clear for you how to buy cryptocurrency on Coinbase, you can always go on YouTube. You can say how to buy Bitcoin on Coinbase. There will be plenty of guides that will guide you through the steps in a very, very easy way. Now, you would say, okay, that's fine. I mean, I will go for this route. Wait a minute. There are quite a lot of examples of times where these custodial wallets turned out to be, I would say, frauds, scams. We have empty courts for those that are old enough in the space. A couple of years ago, we had the most famous case, which was FTX. So here, the main thing to keep in mind is that as a famous saying in the space is not your keys, not your coins, which means you are not holding the private keys, which are the digital passwords, the digital keys that to actually hold your coins. Who is actually holding your coins is the counterparty, in this case, Coinbase, Kraken, Bitstamp, Binance, or whatever. So you are actually trusting these entities to behave in a proper manner. They will keep a stable financial situation that will keep them able to give you back those coins at whatever point you will need them to withdraw coins or money if you want to withdraw in case cash from your account. So counterparty risk is a very critical aspect to take into account once you decide to go for this route. Another option, which is actually basically the reason why cryptocurrencies became so popular, apart from the skyrocketing price moves that everyone would like to surf more often than not, are non-custodial wallets. What are non-custodial wallets? Are basically softwares, internet interfaces, basically, that will allow you to access your coin directly on the blockchain. Probably now it's not the time to go into the technicalities of what a blockchain is. Let's say that the blockchain is the ledger where there is a record of everyone holding a certain amount of coin in their wallet. This ledger is public to everyone, is not corruptible. Nobody can unilaterally change the amount of coin that they have on their wallet. So that makes the system quite secure. Once you have a private key of your wallet, you can say safely that nobody will ever be able to access those coins. So you will be basically your own bank. That it's something that everyone in the space, everyone that is so into cryptocurrencies actually want to have the possibility of overcoming the counterparty risk that we mentioned earlier, and be able to actually store those coins in their own way and with their own level of security, not to mention privacy, because since there is no entity that keeps a record of all your activities, the level of privacy is much, much higher. Now, the cons of using this kind of software is that that requires a deep understanding of the topic, a deep understanding of the risk that is involved. Now, namely, the main risk is that you will lose the password for your non-custodial wallet, as nobody will ever be able to steal your coins. You even won't be able to access those coins. So it's really up to you to keep the security and to keep those passwords safely stored. Now, there are different ways you can store your password on a ledger. So these are hardware keys that store where you can store your password, and that makes the level of security quite high because that is not shared with anyone on the internet. So even in case of hacking of any of your device, which is something that is also quite common, unfortunately, especially for those in the crypto space. They are not able to access your coins unless they also have access to your physical hardware key. So this is quite of a higher level of security, but keep in mind that this could also be considered the next step. Once you buy your coin, then the second choice is how I can store them safely, but that only comes after a certain level of digging into the topic and studying what are the risks involved. Now, something that is pretty new in my presentations is the traditional brokerage. Starting from January, the SEC CEC allowed the first Bitcoin ETF on the equity markets that allowed wider, I would say, audience to access this asset class. That's because now you can you can get exposure to cryptocurrencies really the same way as you buy a stock, a bond on your own brokerage platform. So for any of you that have ever bought a stock, buying now the Bitcoin ETF is as simple as that. The cons at this point is that at the moment the offer of crypto assets that you can buy using these vehicles is still pretty limited. So we have Bitcoin in the US. In some other jurisdictions, we also have Ethereum, Litecoin, some of the major cryptocurrencies you can buy in the same way, but still is still a limited offer compared to the thousands of coins you could buy online. So this is generally a broad spectrum of tools, but is worth keeping it in mind in terms of, especially in terms of security, in order to meet your needs. One suggestion I would give you at this point is also not to keep all your assets on one single wallet. This is a pretty standard security measure in order to prevent the failure of, for example, a security protocol that you have in place in order to store the passwords of a non-custodial wallet. Okay, you will lose part of your asset, but you still be able to maintain other assets in some other wallets. The clear example, again, that comes to my mind is what happened to people that were blindly having faith in FTX. Unfortunately, they, at least for now, probably some of the people will be able to get some of their money back, but still this is another topic. But still, a matter of fact, from one day to another, they were not able to access their funds anymore. So pretty hot topic, I would say, that will be still important in the future. Now, that being said, you decided that now you know how basically to buy cryptocurrency, but how I can do that? I want to do it by trading. And first of all, I would say that you should decide what is your end goal. Now, before going to the next slide, just picture in your mind your answer, and let's move on. I would say that the main end goal is to never put your financial situation at risk. Probably this is something different from the idea that you pictured in your mind, but I always like to start from the risk involved with any activity, and then thinking of the potential positive outcomes. So once you are deciding to go for trading, you should know that your capital is always at risk. So first of all, you should decide how much you are willing to lose in order to be to still be able to be in a stable financial situation. That is also connected to the fact that you should never add too much risk in your daily life through trading. So the main way to reduce stress, of course, is to reduce the fear of losing those funds. Now, it's always it's never nice to lose money, but it's part of the game. We will see that more in depth in the coming slides. But what is important is that if you have less fear of losing the assets that are at risk for a trade, then you will be able to manage the trade in a much less stressed condition. Less stress means that you will think more clearly, and if you will think more clearly, then you will take a much better, more informed investment decision. Now, this may sound to you as a very basic, very simple idea. Believe me, this is not, because once you have your money at risk in a trade, then there is a bunch of consideration that start to go around in your mind, and that will actually interfere with your judgment. Once that happens, then you can be sure that something will go wrong. Maybe not the time at the trade, maybe not at the next trade, because maybe you will be lucky, but at some point something will go wrong. You will not be able to say, okay, I'm going to build something around this. And on top of it, I would say that in general, trading is a choice that you make. So nobody is coming to you and say, you should start trading cryptocurrencies today. So since it's a choice that you are making, you should make a choice that always should improve your life and never put stress or make your life be in a worse place. Finally, grow your capital. Okay, this is probably what you imagined in the first place in your mind. So, okay, we are all in the business of making money. So wherever we do, everything is made towards the goal of growing your capital. Now, this is actually a quite interesting topic, because once you have, why I put this at the end and not at the beginning, because for whatever you do, if you only look at the ultimate goal, you can be sure that along the process, you will break something, and it will be much more difficult to reach that goal. So first of all, I would say that you should focus on the first 2 points. If you work well on those 2 points and on few other points that we will touch on later on in the presentation, then growing your capital will come automatically. So you will lose a bit of focus on growing your capital, but you will find out that you will get there anyway. This is quite strange, but if you think of other things that you do in your life, most of the time, the more you focus on it, the less is likely that you will get there. Instead, if you focus on the work that will bring you there, then all of a sudden you will wake up one day and will say, wait, I made it. And how I did it? Well, thanks to the hard work that I put together along the way. So this is also something that I wanted to stress. Trading is not gambling. Probably you would say, okay, this is something that I already know, but one thing is to know it, another thing is to realize it. So I would say that there are 2 things that you should always keep in mind in this business. And one is outside conditions. So conditions are in your favor, yes or no. and you to adhere to a specific process. Gamblers, they act in a business where conditions are definitely not in their favor. By definition, the dealer has always much more possibilities to win than the player. And on top of it, there is no process. Okay, you could say there are professional gamblers, professional poker players that they adhere to a process. Yes, I would put them into the area of profitable traders because they know when to play. They know when to play when conditions are in their favor, and they always adhere to a process. They know where it's time to bet and when it's time to step away. So gamblers are those that just show up in the market every day. They think that conditions are in their favor. They think because there is a bias in our mind that will tell us, okay, this is going up. They will look for conditions in their favor, even if they are not. They will find a justification to the fact that the market will go in the direction that they believe will go. Ultimately, the market does what the market wants and not what the investor wants, unfortunately. So they will find in unfavorable conditions. And since they don't have a specific process to deal with those market conditions, ultimately they will lose. Going back to what I was saying before, 70–80% of traders lose money. Most of the time, those people are in this section. Then you can also adhere to a process. You can have a trading system, but you are not applying it in the right conditions. That is the situation of a trader that have a trade in loss. This happens. What makes the difference between a successful long-term trader is the times when the trader realizes that conditions are actually in his favor. Lucky traders are those that they just buy Bitcoin in a bull market. Bitcoin goes up 20% and they say, oh, I'm a trader. Then Bitcoin goes down 30%, they lose money and they say, something is wrong with the market. No, it's just that they were in the market at the right time, at the right place, but they haven't realized that the profit that they assumed that they would have achieved was just a matter of market conditions and not the result of a long process that brought them there. Successful, profitable traders, instead, they have a process. They apply that process every day. They run their analysis every day. They only execute trades when market conditions are in their favor. Will they ever always get market conditions in the right way? No, of course. But again, as I said before, the number of times that the more you are able to assess properly market conditions, the more you will be profitable and the more consistent you will be with your trading activities. Now, let's go a bit more into specific examples. Now, for the sake of this presentation, I won't go into specific trading strategies. I will just outline what are the main categories. At the beginning, there was a link that was presented in a slide where you can find in CoinRule help place, help center, a list of trading strategies. This is not the main, these are, of course, not all the trading strategies that you will assess, but it's a general idea of what a trading strategy look like. First of all, buy and hold. So you will buy today Bitcoin because you think it's an asset class that will go up, and that's fine. So you have a plan, you have, I am buying today, and I will sell in 5 years once I will think that Bitcoin will actually realize its full potentials. But once you do that, you need to keep in mind that this approach will put some volatility along the way, will put some pressure on the price along the way, and that is something that you should realize. It's just a condition that you will find, but you will always need to stick to the original plan.
Ruben, I'm going to jump in. Ruben, I'm just going to jump in because we're getting a few questions in the chat. So I just want to make sure we have some time for that at the end. So we've got about like 5 minutes left for the presentation, and then we're going to open it up to chat. Okay. Thanks.
Okay, sure. So I will skip the description of these strategies. You will be able just to Google them online, and you will find more details of how they work. What I want to focus more is that whatever strategy whatever category of strategy you want to go on, what you will need is to find your own edge. So you need to understand yourself. You need to understand what you are actually good at. So maybe you are a patient person, so that's great. You can buy and you can hold that coin for a long period of time without caring about the daily volatility. But if you instead are a person that gets more emotional, for example, there is a limit. So, for example, a solution would be to not to force yourself not to check the price at every hour, every 30 minutes, like most of the people do. So give yourself some boundaries, give yourself some rules, and giving the rules is something, but to respect them is what actually makes the difference. So your secret sauce must be consistently replicable in the long term. This is a concept which is at the very root of my daily activity. So whatever I do, I need to make sure that I can do it the same way over and over again in the long term. I will make you an example about it. So let's say that today there is a news about Chainlink or whatever coin that hits the market. The coin goes up 20%. I was holding that coin and I made 20%. Is that something that I can consider something that is replicable in the future? Probably not. So this is something that I consider as luck. Or, okay, I made some due diligence about the coin. I was hoping that news would be released sooner or later, but it was hope. That was not part of a trading strategy. That is something that I cannot expect to happen over and over again. So this is something that you should keep in mind. Whatever you do, write it down, how you got there, and then if it goes well, that's great. If it goes wrong, okay, take note anyway. But more importantly, you should take note of what happened and say, is this something that I can do it again the same way? If yes is your answer, then okay, go for it and do it again. Otherwise, just keep it. It's just a waste of time. What you will need then, a plan that you will apply consistently over and over again. And you will need time for the plan to actually unfold the results. Now, I will give you also here a small example. If you want to achieve a 20% gain...
We're definitely running out of time, Ruben. I'm sorry. It's really great. Okay. I know the examples, but we're definitely running out. And I know you've got a few more slides left.
Sorry,
yeah?
I have just 2 slides.
No.
Okay, so a plan consistently applied over time, and then embrace the possibility of losing money. So this is a lot of numbers. There is a main takeaway here that even if you have a great strategy that you will bring you a successful winning rate of 60%, which is great. Great traders don't achieve 60% ever in their trading careers. There is a 70% possibility that you will face at least 4 trades in loss in a row. So this is something very important. You will find on the internet around, you will speak with people, they will tell you, okay, there is a great strategy. The first trade is in loss, the second trade is in loss, the fourth trade is in loss, and you give up. The fifth trade would have been the one bringing you back all the losses before. So if you have a plan, stick to it. You need to avoid fear of missing out. Whatever you will see around, people that saying, oh, there is a coin going up 30% today, don't chase it. It's already up 30%. So don't chase any shiny object. Don't chase people saying there is a great strategy, you should use it online. Please don't do it. You should go for your own due diligence. You should check historically if that strategy would have actually delivered the result that says it should. And in that case, you should start gradually tipping your toes into the strategy. If it goes well, okay, bringing it to your trading plan. And once you have the certainty that that plan works well, adhere to the plan and stick to the plan. Let the small results compound for you over time. And please don't use leverage. Don't use excess leverage, because that will actually ruin your capital immediately. And what happened this weekend in the last 3-4 days is a great example of that. Just a few quotes that I think that should always be along your journey. A person who chases two rabbits catches neither. So wherever you have multiple strategy, multiple opportunity, and the problem of the crypto space is that it's full of opportunities, full of things that you would think that are great, and you will lose your focus. That is something that shouldn't happen at all. And finally, everyone is trying to be smart. I'm just trying not to be stupid. Charlie Munger said that, one of the greatest investors in the world. So try to avoid anything that should be considered stupid. Thank you. Sorry for being a bit late.
No, it's fine. It's fine, Ruben. I know that you're like giving us your time, and I really appreciate that. So I was just like really conscious or mindful of that. So, if you want to stop sharing, then we can bring people. I think you'll see more people on screen. You have absolutely captured people's attention, and people are in the room still, so that's really amazing and so much information. So we have a number of questions, and so I am going to dive into those, if that's okay, or I'm going to share the questions. So we've had different questions. We've had a question from Benjamin who asked first, so I'm going to take him in the order, really. He's very interested in how you set up your trading company in terms of it's in the Cayman Islands, and some real practical stuff. So you might want to take some of that offline, or you might just want to give an overall.
Yeah, of course. You can message me on Telegram or on LinkedIn, and then maybe we can go more into the technicalities. Simply put, very high level, the Cayman Islands are a great place for setting up crypto companies, because the regulation there is pretty crypto friendly, and especially for trading purposes, you would be allowed to do basically everything. whether there are some jurisdictions where you would be, for example, restricted from trading on a specific exchange. That is something that doesn't happen if you have a legal entity in the Cayman Islands, and that was the main purpose of my choice there.
Cool. So if there's anything else that you wanted to know, then please reach out to Ruben direct on any of those social media channels, and he'll be able to pick that up. So moving on to the next one, so we have Richard, and I think Richard, I think he's on screen too. I think if that is Richard, say hi or have a wave. So Richard was interested in your algorithmic strategies. Do you use algorithmic strategies? And if so, what program language do you use?
So yes, I do use some algorithmic strategies. Full disclosure, I use CoinRule to run them. So I am not a programmer. I was working with programmers when I was heading a trading desk in the Cayman Islands. But for my purposes, what CoinRule allows me to do is pretty much all I need for this kind of strategies. I'm not an algorithmic trader, so I just run a part of my portfolio with those strategies, and you would be surprised by the fact that simplicity most of the time beats much more complex trading strategies. So my philosophy is always to go for simple things, but with a proven track record, and therefore I am able to use some softwares that trade basically for me.
Excellent. So anything else you want on that, Richard, reach out as well. So we have another on a different area, well, a bit more of a deep into that one. And from Ian's iPhone, I'm going to call him, sorry, Ian's iPhone. And he's asking that you've mentioned about analysis of market conditions and knowing when market conditions are in your favor. How do you learn about this?
By experience. So this is definitely something that comes only with experience, but most of the time it's actually much more simple than how you think. For me, market conditions can be favorable, can be negative, but they can also be uncertain. So most of the time, I would consider a market condition uncertain, and therefore I wouldn't be acting upon it. Because one thing that you will find if you go for any trading course, so you can go online, probably after participating into this course, you will go online and some ad will pop up. Hey, you want to learn more about trading? Okay, these people will show you picture perfect examples of market conditions when to apply those strategies. That is rarely the case. So you will always find a condition that is similar to the example that is offered, but it's not the same. When it's unclear, people will be forced to say, maybe it's similar, it's a bias in your mind that will say, it's similar actually to the case that that guy showed me in the trading course. I will go for it. And then the market conditions were actually not the same, and therefore you lost money. So finding out how market conditions are is a very difficult question. But I would say that you can find some boundaries that will define for you market condition favorable, not in general. What you need to look for is for your good market conditions, and that only comes from the analysis of the past. So you will find a strategy, you will say, okay, in the past this would have worked. What were the conditions there? And conditions for me can be a specific trading pattern, the presence of a specific pattern for a trading indicator. I don't look for anything fancy. So just look for anyone that maybe is familiar with the moving averages. If the price is above a specific indicator, then it means that the price is going up. That could be an indication of market condition favorable. So at some point, if you say, oh, I would like to buy this coin, if your boundary is to have the price above that specific moving average, you already have a filter to your system. Once you have the filter, you already know that you are reducing the likelihood to do something wrong. If that makes sense, I hope that answered your question.
I think it's given them a good insight, and I think it is building on what you said in the presentation around kind of your own strategy. What is it for you? Yeah. And even though, as you say, you're doing all that analysis, it's still about what is it that's working for you, and to really have that.
Just one thing that I would like to underline is that most of the people have the focus on the strategy. Don't focus on the strategy, focus on the process. I can come to you and I say, okay, I have a great trading strategy that will make you money, but if you don't have the proper approach, don't have the proper strength to actually apply the way I said that system, I can guarantee that that system won't work for you. With the same example that you don't have a driving license, I come to you and I say, oh, I have a great Lamborghini, go and enjoy it. You will never enjoy as a professional driver just because you have the tool. So the strategy is the tool you will need to apply with your experience and your sensibility. And those soft skills are much more important than the strategy itself.
Cool, thank you. So we've had a question from Nicholas, who I believe is on screen as well. If you are, say hi, yes. Wave. And I know that there's been some chatter in the chat, really, because the question was around how the heck MetaMask works, really, or all those wallets. Yeah. So if you want to speak to that one, and I do know though, Nicholas, that a lot of people have reached out to you to say connect with me and I can help, or I can walk you through some of that stuff. So but we'll let Ruben dive in as well on that one.
So MetaMask is a great way to access the blockchain. It's basically a door in your browser that you open and you are basically into the blockchain, just simply put. The good of that is that you don't need always a ledger or an hardware key to do an action on the blockchain, to buy a coin, to sell a coin, or to interact for whatever reason to the blockchain. The flip side of the coin is that if your browser is compromised or your device is compromised, you may lose access to those coins. So this is defined as a hot wallet. Hot wallet because it's a wallet which is connected to the internet. And to be connected to the internet means that it's vulnerable to everyone that through the internet can access your device. So it's a great way for people, especially that wants to interact frequently on the blockchain, because they can just log into the browser and directly interact with whatever blockchain. My suggestion is always to have as less funds as possible, just those that strictly you need to use for a daily purposes, for your daily activities, and then keep all the rest in cold wallets. Cold wallets are those that are not directly connected to the internet. The most famous case is a Ledger or a Trezor, which are hardware keys that you will keep yourself somewhere separate from your device.
Okay, brilliant. So I know that's given you some insight, but I know, as I said earlier, people have been reaching out to you. So do follow them up and learn more on that. So I'm going to take you back to your trading strategies, because somebody's asked, is your strategy on spot trading or futures?
It's a mix of those. So part of my assets are a spot on the blockchain, so it's long-term holdings, And I don't look at the valuation of those wallets on a daily basis. I didn't move anything about those holding, even if the market went down 30% basically in the other days. It's something that I just take into account. I'm okay with that. The overall strategy is long term. So this is part of just of my asset allocation. I do also a lot of leverage trading. So leverage trading just not as you would see on the internet, just go 10x leverage on a coin and hoping that the coin goes up or go down. That's not how institutions, that's not how professional traders work. Leverage gives me the possibility of going long a short a specific asset, and can give me the possibility of multiplying the exposure that I have based on my asset, but I always balance long exposure with the short exposure. So that means that the way that I structure my leverage trading is that the market went down 30% and I didn't get any liquidation on my portfolio. That's because I use leverage, but I always match a long with a short. This way, I don't have any risk of being liquidated, but I still get the benefit of exposing myself with a much larger exposure than my capital as a margin.
Okay, so we're going to jump back. I think it's our last question. So just before you do that, I do just want to flag to people who are still in the room. Caitlin has dropped a survey, a link to a Survey Monkey. If you do, before you all jump off, please do feel free to grab hold of the link and check that out for us. We really do value your feedback. So back to you, Ruben. So somebody's asked around, Joanne Evans, you talked about wallets. Can you explain more about the off-chain wallets and things like ledgers to keep funds safe? So I think you've said some about this, but perhaps with the MetaMask example, perhaps just a bit more on the ledger. Yeah.
Yeah, the ledger is actually it's the standard way of securing your funds. So imagine it as an encrypted pen drive that you just plug into your device. This is not a pen drive, but actually it's a very small memory which store just the private key. The private key is the unique, very difficult to guess, very almost impossible to guess password that will actually give access to the funds that you have on chain. Is your on-chain identity, I would say. And therefore, it's the only way to be able to keep your funds away from hackers. I would also add that those hardware keys have also a password. And therefore, it doesn't mean that someone get access to your hardware wallet and immediately they also have access to your funds. They should also know the password to unlock the key. And usually those devices have also an additional layer of security that if you get it wrong for 3 times, I guess, something like that, the hardware key gets blocked. So this is an additional layer of security. The flip side of the coin, the risk here is that at some point you may lose your key. So it's not the risk of other people stealing your key, but you are your own main source of risk, basically. So the good standard practice is always to have at least a couple of those, keeping them in 2 separate locations. Don't move them at the same time in order to prevent any risk of losing them both at the same time. And also you have some recovery words. So if you lose one, with those recovery words, you can buy another one, and you can just recover all your assets in the other device. So it's pretty good option. Of course, as always, the security is important, so you need to store also those words in a very safe place, because whoever may get access to those words and knows what those words are for, they can buy a ledger and they can basically back up your ledger in another device and steal your funds.
Okay, so and so Ian has just said, so without a hacker knowing the passwords, tokens in MetaMask wallets are safe. I'm just gonna put that statement out there. So I think that's what you're saying. If people don't have it, unless they don't have the passwords, the tokens in the MetaMask wallet are safe.
Yeah, it's there is a way, basically. That's why when you type your password on MetaMask, you only will see dots and not the actual letters. But sometimes what people do is that they don't know what they typed. So instead of showing the dots, they basically show the password. And if someone has access to your device, they can also see what you type. In that case, they will also see your password. So that's how they compromise the MetaMask wallet.
Okay, and so
yes, it's a safely secure way. Just copy and paste always without typing. It's also another great way.
Okay, so I'm just going to check that you're okay. You've got just 2 more questions, actually. Sorry, they keep coming in. So we've got 2 more. Are you okay with that before
of course.
we call it a day? So we're going to go for these 2 and then we're going to wrap it up. But so I'm going to say, so one was around your response on the leverage with long and short trade. Somebody said that they weren't sure that they fully understood that. Yeah, understood the leverage with long and short trade. So can you say a bit more about that? And then as well as that, we had another one who was asking, can you explain again about the liquid, how you get the liquidation?
Okay, so let's first one step back to describe how leverage works. So let's say that I have $1,000 and I buy spot Bitcoin. I pay $1,000 to the exchange. The exchange delivers me $1,000 worth of Bitcoin. That's great. I have spot Bitcoin. I own Bitcoin in my wallet. If Bitcoin goes to 0, I basically have an asset that it's worth 0. So there is no risk of me losing more than I invested on that transaction. Now, since people are not patient most of the time, so it's basically the most popular use of leverage, they want to buy more of Bitcoin or of any other cryptocurrency in order to make more money. So how it works is that I open an account on an exchange. I have $1,000. The exchange takes $1,000, blocks $1,000 from my account and says, okay, you can open also positions for $100,000 on with 100x, 100 times more than the margin that I used. Now, the problem with that is that if Bitcoin goes down 2%, I lost already more than 1% that I put as a collateral. So the exchange, as soon as I erased with the losses my collateral, will automatically close my position. And that's how you will often say, oh, I bought Bitcoin, I thought it would go up. Then the price went down 10% and then went up again 50%. So I lost because you got the position closed because you at some point you didn't have enough margin to keep the position open. The exchange automatically closed your position. Bitcoin price goes up again and you could have had a profit. Instead, you end up with a loss. Now, this is generally how leverage works and how you get liquidated. The way to avoid that is to have a long position, so a position that goes in profit if the price of the asset goes up, and another position that is short, which means that you have a position that makes more profit if the price goes down. In the events that happened last week, a lot of coins went down. So even if the long positions were suffering losses, those were compensated by the profits that I got from the short positions. So in this way, basically, you have a balanced net position. As long as the net loss, profit and loss from all your positions is greater than the margin that you have as a collateral for all those positions, basically you are okay and the exchange won't liquidate you. Liquidate, so force close your position, basically.
Okay. Okay, brilliant. And I want to just say thanks also to Richard, who's just dropped a resource in the chat, if anyone's looking at that, for just demystifying Bitcoin wallets. So just to add a bit more intel to our knowledge gathering tonight. So, okay. So with that, I am going to call it a day, but I'm going to say a massive thank you to Ruben, who is calling in from Italy, who has given us a huge amount of his time to prepare for today and to show up and to share his thoughts. So a big thank you, everyone. Lots of reactions, flowers, all of those things anybody wants to give. Thank you very much. Please do. It's been lots of comments and lots of the people, anyone who has had to drop off already, Ruben, has been saying really great advice, great information, really, really helpful. So massive thank you from us for joining us today. I know the last one you did went down really well, and the second one that you've done for us has also gone down really,
Looking
really
forward
well.
to the next one then.
Thank you.
Thank you so much.
So, okay, so before we do that though, so what I am going to do is, firstly, I need to just say thank you to Wazim, who I believe is still in the room, for showing up, sponsoring us, and then for sharing information for those who want to keep their assets safe for their inheritance. Please do check out Vault 12. That's really, really important. And then I am just going to share my screen quickly, and I am going to put up the code for everybody to catch up with us. So if you went really quickly, I'm going to go back. So for those who want to live stream, this is how you can do that. But again, we will make the deck and the recording available on our YouTube. So please do jump over to that and to find us so that you can follow. But we look forward to everybody live streaming. And with that, I would love to thank everybody who has shown up. It's been really great to have you here. Really appreciate you giving up your time. I hope to see many of you in London next week or at future events. And then also or streaming live. And remember, everyone, take the survey before you jump off. There is a survey here. Please do share it. Fill it in. Tell us what your thoughts are. And connect with us on LinkedIn, on all of our socials that we had up earlier. We have a really great tree now, which has all of our socials on, so that you can join us here on our community. So please do that. And with that, I am going to say good night, everyone. Have a great evening. Thank you very much.
Bye, take care, bye.
Bye, everyone.
Good theory? Hello.